Hey, good morning. Let's go over today's trade plan. So in the overnight session, we had support at 21 to 23 and resistance at 27.5 to 29.5. And for the most part, ES has remained balanced between those support and resistance zones. At this point, heading into the open, if buyers can hold ES above the prior close of 26 and ideally even above the previous VPOC at 28, then the market could be setting up for a upside break. We have pre-market resistance at 29 to 31, and a breakout above that area would confirm the buy side in control, and it could result in a new all-time high. So above 29.31, we have the all-time high at 33.5 from Friday, and even though we're running on light volume, light volume can be indicative of a limited range on the day time frame, but that range can quite easily just be to the upside. So off the open, we're going to just keep an eye on how well ES is holding above the previous close. We're using 22 to 24 as the micro bull bear zone, and holding above that area just tells us that buyers can remain in control. But ideally, if we're going to get an upside break, we should not really even break below the 26 prior close. And if we start breaking below that, then even at 22 to 24, we do need to be a bit more cautious. Because that would be a sign of short-term weakness. So on the upside, above 29.31, all-time high at 33.5, and at that point we could push higher to a new all-time high. And the next area, just based on the recent ranges that the market can hit, is 39.25 to 41.25. But we just have to keep in mind that above 33.5, there is no hard resistance in this market, and ES can simply stall based on just the range getting exhausted. We are so far running on pretty light volume. So on the upside, if you're long and holding above the all-time high, anytime you start seeing some exhaustion or some warning signs, it's a good idea just to take profit and look for the next setup. And at the same time, because we're running on pretty light volume and we are at a short-term inflection point, it's better to wait a bit and see some real signs of strength in the market before going long at these higher prices. We do need to see a breakout above 29 to 31 in order to confirm that upside breakout idea. And until the market breaks above that, we're still stuck in the overnight range and the market is still balanced. On the downside, if we break below 26, that would be an early warning sign indicating some sellers entering this market. A break below 22 to 24 would confirm the sell side being aggressive, and that could result in a break below the previous low of 20.5 and a move down to 14.75 to 16.75. So that is the first inflection point on the way down, but we just have to understand that a break below 20.5 would be a break below this recent range. So you do want to be a bit more cautious on going long, because then on the upside your first target is going to be 20.5. So, just keep the reward to risk in mind. But the first inflection point is 14.75 to 16.75. Below that, we have support at 20.10 to 12.5. If the market doesn't really react at the initial support zone and goes straight down to 10 to 12.5, then this zone is very high odds for a bounce back up towards the 19 to 20 area. And given the light volume, the 10 to 12.5 area could actually shut off the selling and bring buyers back in this market. But if volume really starts rising as we head down there, then we'll need to be careful even at that 10 to 12.5 zone. But the first test is very likely to result in a bounce, given the larger time frame being quite bullish, and that would be a pretty significant pullback into a support zone. So that's the downside scenario in the event that the market can't hold the 22 to 24 zone. But as long as we're holding above 22 to 24, above 26, by default we are going to give edge to the buy side until we start seeing some real weakness in this market. We've seen when the larger time frames and the overall context is quite bullish, then buyers can step in even when the market looks relatively weak in real time. So you want to wait and see some real signs of weakness before getting aggressive on the short side. Until then, buyers can step in and we could still be just balancing before a continuation to the upside. So by default, we're going to give edge to the buyers. But if we start seeing some real warning signs, then we'll at least be cautious on the buy side. And even then, if we're going to short the market, we do have to be just aware of the overall bullish context. And that means, be a little bit more patient on the short side. Make sure you have good trade location where you have good reward to risk. And, with good location, even if the short side doesn't play out, you'll still have opportunity to at least get out of that trade or potentially even reverse and go back long again. So those are the main ideas heading into the day. There are no major econ reports due today that can really serve as a catalyst for a big directional move. And that's why, if you're going to break out above 29.31, it is a good idea to, take profit wherever you notice the market kind of stalling or exhausting short term. So let's see how well the buyers hold it up above the previous close and above the previous VPOC, and we'll take it from there.